Hello, my name is Brian Overby. I am the author of the Options Playbook, and I'll be your host for about the next 30 minutes here on Options Guy TV. Today's date is Friday, February 23rd. Might be marked as the day that NVIDIA started to rally in the S&P 500 index. They once again came out and blew away earnings, and the market reacted positively to those numbers. The last quarter, they blew away numbers, and the market acted positively right after the call, but then you did get a little bit of a sell-off. Our view on NVIDIA, or my view on Options Guy TV, was we're going to sell the news. So we anticipated a bearish movement on the downside in NVIDIA. There was 11% expected move, and aftermarket, it did the expected move. As soon as they announced earnings, the stock popped about 80 points, which was around 11%. And that's kind of where it hung in the aftermarkets. And now it's continuing to flow to the upside. So we went out and adjusted our paper trade portfolio in NVIDIA. We had 3 option contracts, had obviously a very large gain. We got in NVIDIA. Our first call option we bought was back in November of 2023. On the downturn, we actually bought some more after the markets did go down after their last earnings report, and we had a position of 3 contracts in. We decided to sell one because we're becoming a little bit too heavily weighted in NVIDIA. So my hope was that we could sell one, get a little bit of a downturn, and maybe buy a 80 delta option. Once again, the delta on our option contract inside our paper trading portfolio is now at 1. We're way deep in the money. We're probably going to roll that option contract up in price, take some of the money off the table, and manage the risk in that way. But to start with, I want the turbulence to kind of settle down. I still think there could be a potential sell-off right around 800. I think once again it's a big round number, bounced up against that mark. It's actually down a little bit from the open. If you want to look at the parabolic move, we can pull up NVDA. Let's go to the Trade Hawk software. I should probably have said that, but here we are. So the high that we've had, the all-time high, was 824. So we have came off 30 points. We're at 794, and we did have the run down going into earnings. That was, if anything, I did kind of mention that on the show. That kind of scares me a little bit that we're having the sell-off before the earnings, as opposed to riding up going into the earnings. And you see this, and let me just zoom in a little bit here. All right. And okay, so in this instance, that did not do what I wanted it to do. Okay, so in this instance, we saw the market come all the way back down. This was the 20-day moving average. That's kind of where it hung out right before the earnings. Big move up and continued on up all the way up to 820. We're finally seeing a little bit of a sell-off right now. We sold an option contract before the earnings, and now if we go back to our portfolio and we look at our portfolio, let's look at the account view. Overall, this portfolio, it started at $200,000. We're now at $305,000. I always want to keep a bunch of cash in the account when you're looking at buying in the money option contracts, because here's the way that I look at this. If we were buying NVIDIA, what we would have done if we were trying to buy the stock is we would have bought 300 shares of stock. That would have been our goal. By buying the deep in the money option contract, we were putting up around 25% of the underlying stock price, somewhere between 25 and 30%. And we went out way far in time. And if we're doing that, I don't want to take all the capital that's in the account and buy as many option contracts as we can, because that defeats the purpose. The main reason why we're buying deep in the money options as an alternative or a surrogate for the underlying stock is that we want the benefit of having limited and known risk on the downside. Now, you can say to yourself, well, 20%, that's a lot of risk on the downside if you're putting up 25, 30% to start with. Well, you got to think about the fact that if it ever did come down to our strike, we would sell and get out. So ideally, in my mind, I'm risking somewhere between 10 and 15%. The hard line in the sand with me, if I'm buying deep in the money options that are, 80 delta, is if it ever comes down to your strike price and you can sell all that juice because it's an at the money option contract, that is where my stopping point is at. Now, you can take the approach that I paid X dollars for this call option. If I lose X dollars on the call option, I'm going to get out. But I have a general line in the sand that I want to sell an at the money option contract. And the wonderful thing about these deep in the money options is that as they go up, they pick up deltas, and the delta slowly approaches one. And as they go down, they lose delta. So they don't go as hard against you as they do on the upside. Now, that's also has a lot to do with if it ends up being an at the money option contract, because that's what holds all the time value. So your delta is going to be about 50. If it comes down to an at the money option contract and you're incorrect on your forecast, if it goes up, your delta is fastly going to approach one and start acting a lot like the stock. So a lot to talk about with NVIDIA and everything that has happened. It makes the portfolio interesting. It's not boring, that we have all these positions on. Home Depot announced earnings. They've done well since their earnings report. Let's pull them up. And this gives us an opportunity to talk a little bit about selling some more calls. I don't mind selling them in Home Depot, a few in Schwab. We sold one call in Schwab recently, and I'm sure I meant to sell three. I don't know why I would sell one. I maybe sell two, but I don't know why. I just must not have changed it. But if I look at this, we're at 365. Here's where they announced earnings. We jumped up to 371 right now is where we're trading at. So a nice earnings report. Also, Walmart has done pretty well after their earnings. They did okay too. So here's the big jump up in, okay, that's Walmart for sure. Here's the big jump up in Walmart after their earnings report. So the consumer remains strong. The guidance, it has been mixed with a lot of the retailers that have announced. They're very trepidatious in their forecasting going forward, saying the economy is slowing down, but they keep blowing away earnings. And that was, I think, the moral to the story last quarter too. Still very trepidatious on what's happening with sales and where they're seeing the economy going, but then they blow out their numbers. So who knows? They're just being very cautious with some of their words. Big move up. Obviously, some chop in the market, but it's real nice to see it right around 176. Also, the same thing in Home Depot. Charles Schwab has just kind of been hanging around. Interest rates have kind of hurt them a little bit. The fact that we sold the 68 strike call, that is trading for 15 cents. We might even be able to buy that back and just sell three more a little bit higher. Don't mind selling calls in that. I'm going to get gutsy here, and I'm going to sell because I still have the mindset that stocks don't usually go straight up. There's been a few out there that have tried. Eventually, they'll sell off a little bit. And I do feel like you're going to see some profit taking in NVIDIA. And so I do want to sell some way out of the money calls. Earnings is done. Implied volatility has came in. A little bit of a sell-off today. And so let's sell some out of the money calls. We're going to have to watch that one closely. I don't know if I'll be able to just check on it during the Options Guys show. So I think that we'll do that. We'll do this in Home Depot. I like leaving Lilly where it's at. And Google has been a weird stock. They don't talk about AI. People, I think the numbers and everything that they are doing have been great, but I feel like the marketplace is scared by the fact that they haven't really they haven't had a lot of headlines around AI. They are talking about it, but people are thinking of it as a real threat to their monopoly that they have on search. That AI could be a threat. So the stock has done well over the last year, up over almost 50%, but that's only because it really got beat up. It's trading at the lowest PE in the Meg 7. So the value is there. It's just the all right. So that's what we're going to do today. We have, don't forget, there's been so much news going on with so many things. We have an S&P 500 index iron condor on. And that is the other day we were looking at the breakdown towards the puts and wondering if we had to adjust the put side of things. Now the market has came all the way back, and now we're looking at the call side of things. The trade I in the paper trading app, which that's what we're on the Trade Hawk software right now. I can't get quotes on the SPX, but we're still okay on that position. So I just want to let you know that if we look at where the S&P 500 index is at right now, so let's just put in SPY over here. We're right below five. Well, let's put it this way: our short call is 5,000. 5,125 strike. 5125 is the strike. So we're not quite there yet. SPY is at 508. We're a little bit below the 5100 mark, and we're still in the danger zone. We're going into the weekend, strong move up. A lot of it on Nvidia's back on what has actually gone up there. I don't want to adjust the trade, but we're going to be probably out Monday or Tuesday of next week, especially if we can just get a little bit of a pullback. Then we stayed right within the range. Our maximum gain was around 150. If I can close out that spread for around 20 cents, I'm going to just take it off. That's the way that we're going to look at it. IWM. So on IWM, which let me throw this into my in the money watch list. IWM is the ETF that tracks the Russell 2000 index, and that's at 199.82. So we've had the run up. There's been a potential to actually sell the call on the upside, and this one's probably more important than anything to look at. And we've had a lot of chop in the marketplace, but right now we're not at a good spot in that trade. We're going out till March 1st on that expiration date. We bought the at the money 197.50 call and 197.50 put. We paid $7.40 for it. So on the call side, we were definitely in the money. We were definitely doing well, probably paid for the whole spread. So we see the market was right around here and made the big move up all the way up to 204, 203. So that's 7 points right there. So the intrinsic value alone, we had the call option, probably could have sold it somewhere for $10. And if you missed that opportunity on this move up, you had another opportunity there and another opportunity there. Now, if I would have ever got up to the 205 level, I would have definitely got out of that call side of things, right? I don't need to wait for the breakthrough. I don't mind doing that. And on top of it, we still got the put that we can sell. So looking for that chop. This would have been an opportunity. If you missed it this time, I think you might have came back in and sold it out on this side of things. So let's actually look at the price of it. We're right at, I think we can look at a price. It came all the way back. I really wish that we would have been online when we hit the 204 level. But let's go to the March 1st expiration. I would assume that we're going to be down on this a little bit. All right, so 197.50. If we look at where our call is at, we're at 379. And on the put side, we're at 122. So we're at 499. Not bad. I mean, we paid 740 for it, down a couple $100 at this point in time, but there were many opportunities to get out. And I've said this many times, we don't do a lot of long straddles. The chart was very interesting in IWM. And because it was very interesting, we did the long straddle, and I will always leg out of a long straddle. I prefer to do that. So if I get a gain on one side, and we could have sold the call option for around $10, making about 250 on the call option side of things, I would have definitely got out. It might have even been a little bit more. I actually might go back and pull up some other software and take a look at what that call option was trading for when it was around the 204 level. And then on the put side of things, you might get that whiplash. And IWM is definitely an underlying that you can get that whiplash on. I'm surprised, and I mentioned this before, that the implied volatility is right around 20%. Not much different than Apple, or how you might say. But if we look at the actual chart and let's zoom out in time, let's go out 1,000 days and just look at the movement in the underlying stock from bottom to top on this channel, from 165 all the way up to 200. That's well, actually all the way down almost 40 points, 35 points in that. So the range was 35 points in general from lows to highs, and that's in a 1 month period. Most of these channel moves are. So if we break out from this 205, I would be interested in maybe looking at getting just long a call option. Don't mind. Volatility still hanging right around that level. This is a very important level right here, right around 211. That's where we're going to, that would mean that we're going to fill this gap that started everything on the downside, and a little bit of resistance right there. So definitely an interesting chart. And IWM and Russell 2000 is not always interesting. In other words, it's hard to decipher what all these small cap stocks are going to do. And because of that, usually charting techniques don't really work that much in the Russell 2000. But this was obviously a defined channel. 1, 2, 3, finally broke out on 4, and now it's just trying to figure out exactly what it wants to do. All right. IWM. Okay, so next, what do we have here? Oh, let's sell some calls. So today we're going to be short and sweet. If you have any questions, please do put them in the chat box. We are going to take our paper trading portfolio, and we're going to sell some calls on NVIDIA. We're going to go out very short, and I just don't want to get caught up on this. I'm going to go far out of the money. I'm going to sell a few dollar calls, or a couple of bucks or so, just because I'm a little nervous over the next couple of days, what might happen with it. And then when we come back next week, we're going to actually roll this up. We're so deep into money on this option contract that I really want to roll it up, take some money off the table. We sold one option contract, which in hindsight, obviously, would have been better to stay in it, but I was okay with that just because our portfolio is up so much. So I think it was a $200,000 portfolio. We're already up $100,000 on it, and that was since November. So I want to take some of that money off the table. And one way to do this on these deep into money option contracts is to roll from this deeper in the money option contract back to an 80 delta, take some of the premium off. You'll do it for a net credit to the account and go right back to where you started. Same concepts on everything with it. So that will be our next move. So let's go in and sell 2 call options on this position. And it's something we're just going to have to watch. I'm a little nervous to do it on this underlying stock as opposed to like Home Depot or Charles Schwab. I feel a little bit more comfortable on that. I don't feel like I'd have to manage the position as much as I would on NVIDIA. Okay, so trading orders, options grid. There we go. NVDA. Let's see what we can do. Let's go to March. I like this March 1st date. Usually February is kind of a iffy month in the calendar. The last couple of weeks in February are usually, not strong. They're not September and October numbers, but this is the month. Usually you get a lot of money that comes into the market at the beginning of the year, and just kind of fades as we get into February. And right now we're obviously not having any fading, which is just good for the markets. March 1st, though, that's part of the reason why I don't mind targeting it. Let's change the expiration grid format. We are expirations shading. Here we go. We want to do one standard deviation move. That will be around a 16 delta if we look at that. So our delta right here. So according to the options grid, our one standard deviation move is right around 835 strike. And to me, it's somewhere between 835 and 840. And we're still getting $4 for that. And that's for 7 days in the marketplace. And we're still getting $4 for that trade. So implied volatility up around 45%. This is a 0-day option. This is just today. So implied volatilities are still high, but they have came off quite a bit. So we're right back to where historical was at. And gosh, I think we have all the expirations. So I don't think we have much choice beyond 855. Let me make sure I got all the expirations out here. Yeah, I do. Okay, so we don't have a choice. When does this happen? This is interesting. Okay, so this is a lesson in option trading. We've never gone beyond 855 in NVIDIA, and the market has made a real strong move. So the marketplace has not opened up any 900 strike options, for example. So they haven't gone to the next step. The stock is in new territory, has never done this. Normally, a stock would have to trade, it would have to trade through that strike price. And with most normal stocks, they only open up a few strike prices. So I think our high was, and that's probably what happened here. What was our high again? NVDA. We got up to 820. Yeah. So they opened up all the way up to the 855s. So they didn't go nuts with the strikes that they opened. But that does mean this is our only choice. This is the farthest out of the money that we can get. Delta is saying 11% chance of that stock getting there in 7 days. So I want to sell those. To me, this is kind of a no-brainer. Well, I say that's going to probably bite me in the butt. But we have a real big position on it. Let's hedge a little bit of risk. Let's bring in $3 on this position. 855 isn't out of the realm in 7 days, but yeah, I'm going to feel fairly comfortable with this. Let's get rid of this. Let's start over. Here we go. We're going to hit the bid, and we're going to hit it twice. So we got 2 contracts. We're going to sell both of them. 312 limit for the day. Let's hit the bid 305 and make this thing fill. All right, so we're in the paper trading app. We're selling and send an order to short NVIDIA 855 call options with the March 1st expiration date. Send it to the market. Oh, actually, we should get a fill better. It says 335. So if we go to orders, we probably got filled at a higher price. Filled to at, oh, it filled me at 305. That, yeah. Let's see. Unlock. Oh, 335. Okay, so we did fill at 335 on that trade. And so if we go back to the portfolio, we see we are short 2 of the March 1st expirations, and we are long 2 of the 320 expirations. The delta, yeah, this is almost 1 on this, 195. So 200 would mean that our delta is at 1. So we're going to roll this up in strike on that position. Let's go to Home Depot. How much time we got here? 25 minutes. Oh, I do see. Okay, so Walter's asking, what do you think of the 0 DTE SPY calls for this afternoon? So before I go and look at the Home Depot trade, well, whenever you're looking at a 0-day trade, Walter, are you talking about selling them, or are you talking about selling them or doing something fancier? Are we going to do a short call spread, or are we going to buy calls outright? So I need to know that before I would answer this question. I don't think I want to get bullish. I think the market has ran too fast in the short period on the back of NVIDIA. And right now, if I had to say path of least resistance, the strategy maybe I would do is go close to 1 standard deviation out of the money based off the market right now and sell a short call spread. That would probably be the trade. Buying them for a bounce. No, I don't necessarily want to buy them for a bounce. I don't. From everything that I said, also from looking at the chart here. So we opened up, and right now the trend is to the downside. So let's go back to this. Let's look at a day, minute. Let's go number of minutes, 15. Yeah, that didn't turn out very well. Okay, so I guess I thought we opened up higher than that. So we've opened up and now we're coming off just a little bit, but the candles have been positive through here. I don't know. That's a flip a coin. That's a flip a coin. I would rather just sell a call spread. I'd rather sell a call spread somewhere up around the 515 level and say that it's not going to go beyond 515. Or if you think there's a bounce, you can get more money on a put spread. So you can sell the put spread below. I would sell some premium right now is what I would look to do if I was going to do a 1-day trade. But obviously those are extremely speculative. But I don't think I want to buy calls outright. Okay. Next, let's go back to my Home Depot. So here's our Home Depot position. 55. We own this at 55. It's now trading at 84. We're up about 50% since I think we put this on. Well, I don't think we put Home Depot on until January of this year. So this position has been on for about 3 months. Let's go in and look at the options grid. Let's pull up Home Depot and see what we can sell. If we can get something for the March 1st expiration, I'm happy to do that, but I don't think we're going to. 110, right around, where's the delta here? 21, 80, 50 cents. All right, I think 7 days. I'm surprised that we're getting that. 18 vol. It's mainly that it's a $372 stock. So the vol is fairly low. That's a decent premium there. 16 delta is right here, 82 cents. All right. Now, if I was long the stock and I was selling a call against this, I would look at the 380 or the 382.50. I like this premium 123. I'd like to get, a nice round number of $1 is good. This is right in between these two. Look at that. So since we're not long the stock, I'm going to sell the 50-cent call here. In the portfolio, we have one option contract. So we're going to sell this option contract and let's fill that trade. Sell the close, 48 bids there. Now realize I would work this order if it was a real account. I'm just going to hit the bid because I need these trades to fill. And when you're in a paper trading application, they won't fill at the midpoint because there's nobody that's trading with them. So you really need the markets to move, right? Because this isn't getting displayed on the trading floor. So keep that in mind. So that always kind of hurts the positions, especially in the deep in the money calls, because you can't work those orders. And you're usually paying very close to the ask to get that trade filled. All right, so we're selling this at 43. We're going to sell to open. 1 March 1st, 385 call and bring in, no, we want 43. Shoot. Let's see if we can get it at 45, see if it will fill me at 45 cents. So send order to short call Home Depot 385 March 1st, 2024 expiration. That is correct. All right. Walter, any other questions? Anybody else have any questions? Please let people know about this. We want this to be an open conversation. If you are in the YouTube platform, you can participate right alongside. This is also going to happen inside the Tradier Hub. Eventually, we're going to get there where we're going to be able, if you're in the hub or in the YouTube platform, you will be able to participate by putting questions in the chat box, and I will try to address them during the show. So one of the great features of this is that we have this opportunity to have a two-way conversation about this, about anything in the options trading space. But with that said, did I hit send on this? Yes, I did. Let's look at the orders. Open. All right, let's just change this and hit the bid. 43 cents and hit replace. Are you sure you want, over here it says, are you sure you want to replace the order? And the answer is yes. And so there you have it. Sold one call, sold two NVIDIA calls. Schwab is I wouldn't mind selling a couple more Schwab calls. I don't know why I only sold one. I'd have to go back and listen to the tape and see why. But only sold one call on that position. I don't know why I went to sold three. That was after their earnings, and that's going to go away. We're going to have to manage these trades. I'm going to watch this one really close. I'm a little scared about the NVIDIA, but it's only 1 week. We only have 7 days to expiration to try to ride this one out. And that's it. That's it for this edition of Options Guy TV. Please click subscribe. Please ring the bell and see me this Monday for the next edition of Options Guy TV at 11 a.m. Eastern Time every Monday, Wednesday, and Friday. Thanks for coming, everyone.